You may be wondering how to account for your home when you update your net worth. How much should you include in there to have a true reflection of what your wealth level is? It can be confusing whether you should include the purchase price you paid for your home, the tax value of your home, or the amount that you get when you sell your home. What do you put in your net worth? And there's some other reasons why all this can be very confusing. That's exactly what I'll be explaining in this video. At the end, I'll tell you how you can actually use your home to increase your net worth. Hi, my name is Camille Gaines. Welcome to Retire Certain. This channel is all about helping people build wealth with slightly alternative methods that don't take decades and creating diversified income streams so you can live well. I'm not a financial advisor, so I'm not here trying to sell you wealth management services. I'm just a bit of an investing nerd. I love to talk about investing. I'm also an accredited financial counselor, but mostly I just talk about what I've learned from almost 40 years of investing and personally creating diversified income streams over the past 15 years. Now, in this video, I'm going to talk about this whole issue around how to value your home in your net worth because it can be sort of confusing. So, in order for you to have a real good reflection of your net worth and in order for it to be really current, you'll need to make sure that you have the right amount for your home, right? So having that right value in your net worth will give you information that will help you make strategic decisions about your wealth. For example, before you can even think about downsizing, you'll want to know how much your home value contributes to your net worth. Or you may want to sell your home so that you free up some capital, so some of your investment money, to put into investments or other assets to help you build wealth before you retire or even during retirement. By the way, if you're thinking of downsizing, watch my other video where I talk about downsizing. I'll try to remember to put a link to it here. So now, how should you value your home in your net worth? Let's get back to that. Since our home is one of our largest single assets, again, it's super important to make sure that we've got it valued correctly in our net worth. So really the easiest thing to do is ask a local realtor how to value your home. But I feel kind of like I don't want to bother a realtor by asking them that if we're not thinking about selling our home. And I also find that in general, when anything that comes to something as important as our money and our investments, I like to sort of have an independent sort of insight about that. So I'll share with you what I do. So I sort of feel like I have my own knowledge and my own expertise around that, especially since our home, for us at least, is a huge value or a huge asset for us, I should say. I guess it's also a good value because we bought it at a good price, but that's another video. So what I do is I keep an eye on homes that are sold in our neighborhood. And I also go to open houses that are in our neighborhood and I check out to see which homes are really similar to ours as far as the age and the condition of the home. And then I use this in conjunction with the sales asking price at the open house to get an estimate of about how much I think that our home would bring in the market. I use the square footage of that home, the sales price of that home that's the open market or for sale, and I take our square footage and I just multiply that, and I think that gives me a really, really good idea of how to value our home, because that's what the market is willing to pay at any given time. Now, if all this sounds like too much work to you and you don't want to go to open houses, I actually really love open houses. I like to see how things are remodeled and updated and decorated and that type of thing. But what you can do is you can go to websites like Redfin and other real estate websites online, and most of them have past sales history, and you can look and see what houses have sold for. Now, the other thing to consider is location within the neighborhood, like if it's at the edge of the neighborhood and it's adjoining a busy street or something like that, and lot size and other factors like that are important to consider when you do that estimated price per square foot. So you want to think about things like that as well. Now, again, I just get an estimate based on all those things I mentioned, and then I just multiply it by the square footage. Now, it's easy to get really excited about that, right? And go, wow, I have this much money, and let's go sell our house. We're going to have all this money, okay? But before you do that, what I want you to do is make some deductions, because there's some expenses that you are definitely going to have if you sell your home. And here's what they are. And by the time, this was a little bit depressing because we looked at this and it's sort of shocking how much you have to take off the value that you come up with for your home. So first of all, if you're planning on using a real estate agent, then you'll want to deduct right off the top the amount that your real estate agent is going to charge you to sell your home. For our area, our home, for a full price broker, it's 6%. although that's not set in stone, so you can see what you would need to pay. I think there's some rules around that. And then also, to be more realistic, you'll want to reduce the amount of your home by any potential expenses that may need, things that are going to need to be fixed up before you sell the home. So think about things that you already know about that will likely come up, but also think about you're going to have an inspection. So what might an inspector come up? And I think it's really good to just go ahead and kind of, the old, I guess, accountant in me wants to be more conservative back in my previous life. Be more conservative and be a little bit high on that. So maybe 10% of your home value. In fact, I've seen from research that that is a very good number to use. And then that could also include your closing costs that you will have when you sell your home, right? So by the time that you factor all of that in, you will have a significantly less number than you started out with, maybe something like 15%. And then, of course, you'll also need to deduct any mortgage outstanding that you have on your home. And if you have any kind of a HELOC, home equity line of credit, that you've taken out, you'll need to deduct that as well, because that will need to be paid off before you can sell your house. But it is very important to do this because, well, it's an important part of most people's net worth. I've done an article about this, whether it makes sense to downsize, at my website, retirecertain.com. You can check that out. I do want to mention that sometimes in qualifying for an investment or qualifying for financing, you need a certain level of net worth that is outside of your primary residence. An example of something like this is if you qualify for investments that require you to be an accredited investor, because that excludes the value of your primary residence. So in this example, you wouldn't include that in your net worth. You would at least deduct it. But for your working net worth that you're using for your financial planning, you would certainly want to factor in your home. Another thing to consider just around your home as far as your net worth is that it is just not a liquid asset. So a lot of people confuse assets with liquid assets, and since a home isn't something that you would immediately have access to, some people think they shouldn't include it in their net worth, but you should, because it's there. It's an asset that you have. But you just need to remember that push comes to shove and you need some money. A home is not going to be something that you can sell, instantaneously like you could a stock. You could easily same day sell a stock and have access to those funds very, very quickly. Now, it's important to remember that even though home is not a liquid asset, it is an asset, but it also is, some gurus, like I know Robert Kiyosaki says, it's an expense. It's not really an asset because assets generate income. Well, some of them do and some of them don't. But here's what I want to share with you that's super, super cool. And that is that in this day and age, a home can become an income generating asset through something like Airbnb. A lot of people have extra room, especially people that have grown kids that have left home, and they can rent out a portion of their home or a separate dwelling through something like Airbnb. I know some people that do that very successfully. Similarly, something like a garage apartment could be rented for extra income. I know of retirees who have done this, had just a wonderful experience renting their garage apartment to an international student, and they ended up having a wonderful relationship and went over to Germany and visited the family, and it turned out to be a great experience for them. So we live in a time of just absolutely incredible opportunity, and this is just another example. I'm going down a bit of a rabbit hole here, but it's just another example how when you shift your thinking, how you can start thinking about opportunities and seeing opportunities that certainly weren't here 10 or 20 years ago, for you to think of ways that can generate income streams that previously just didn't exist. Now, I hope that you found this helpful. If you want to know more about the value of your home and how it affects your net worth, watch this video next. In the meantime, build wealth, create income streams so you can live well.